Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Ira Epstein of Linn and Associates with your financial market update, and here we are on Thursday, the 19th of October, 2017, just after 4:10 p.m. Central Daylight Time. You know, if you get my morning subscriber video, in it I was very careful. I said I've got a split lip and nosebleed because all the indices were down at that point. I also didn't think it was going to last, and it didn't. At the end of the day, they managed to bring back the Dow and the S&P. The only two they've kept down were the NASDAQ and the Russell. And the Russell has run its course on the downside. It's in a downtrend right now. It's the one index that's done it. But the question when I say it's run its course, it keeps going into these 1490s and keeps coming back at you. And as long as these other ones keep picking up, where are you going with it? The dollar down a little bit as the euro going up. The news of the day is that the European Central Bank, again, the rumor mills, now they're going to be back on the table talking about cutting back their bond buying program. Originally, that wasn't going to be discussed maybe until even further down the road, November, December. Now the rumor mill is the opposite. You've got Spain on the table. What are they going to do? There's an emergency meeting of the Spanish government. How do they deal with the breakaway province that maybe is going to declare its independence? So the gold market's up on that news as well. Then we have China, and they had good growth again. And that, you would think, would have picked up the copper. What it did is it cushioned the blow in the copper intraday. So as we take a look at the weekly area charts in the S&P, you've gone from 2327.50, and obviously with today's close, you're at a new all-time high close. When you come to the daily charts, the same thing. You've gone from 2424.75, and these are just on closing bases. So the market has had a heck of a run. Now look at this intraday break. Market breaks through everything, comes back late in the day, wipes it all out at one time, which pretty amazing, isn't it? It had to be program buying, I think, at the end of the day as the market came in. You have stepped out of your trend. So the swing line, which has been since back here at the end of September with a constant pattern of higher lows, higher highs, it stepped out of that. Even though you're up here, you now have a higher high and a lower low. So we had the first step out, and that's what happened when you took out the 2552 level, that trend part has run its course. That doesn't mean the market can't go higher, but that leg, I would take this off the chart and say that's the first sign it's run its leg. The market wasn't even strong enough to get down to on the downside, the break wasn't strong enough to get down to the 18-day average of closes. Interesting. When I look at the Bollinger Band, obviously it's way up at 2578. It's only 18 points away. So when I say way up, I'm joking with you, because if you look at today's range from high to low, you certainly are in that range that you could get there. The problem for the market is that the swing line isn't trending. But what about the all-important slow stochastics? They didn't budge. And what's my theory? Until these budge, breaks in the market get bought by the pros. My theory, it's how I work it, that's how I work the embedded. I haven't changed my opinion. That's why if you were watching, if you're a subscriber of mine and you saw the morning video, I think you had great insight looking back at it. When we look at this in the Dow, still higher highs, higher lows, no budge at all in the embedded reading. But the NASDAQ, like we had seen before in the Russell, is showing the first signs that it's breaking down, and that's the first way that often the market leads itself into losing an embedded reading. It has not lost it yet. Until it's lost, it's not lost. Therefore, pullbacks are still being bought. It got pretty close to its 18-day average. If you falter tomorrow, and the word is falter, watch out. Then you might get that number breaking down the way you had in the Russell, and you could see once it broke itself and started that pattern down, And you see it right here. That was on Monday. It seems so long ago. Then the objective was the 18-day average of closes. You got up, you played with it, and you can see what you're doing today. So it's a mixture of loss of momentum, not necessarily the big trend loss, but the market has now worked its way down. This is a healthy break in this market. Not the beginning necessarily of bearish or bullish. It's healthy in that now the market's going to be able to get its legs under it again. It's not just a straight up run in the market. In the VIX, what did I warn you the other day? I said that you've got upside momentum that's flattening out. The trend was up. You got higher lows, higher highs. So the question is, if you did break one way or the other, I'm going to come back here. If you broke out one way or the other, you had here the higher high, higher lows, higher highs. You already had the higher high there and the higher lows. Let me explain what I said. The problem with the market this narrow is if you get a 10% break, what are you doing? Going down maybe to the 8 and a fraction level. And the market has shown that each time it gets this narrowness, it finds it easy to get and pop to the upside the same way it did back here. But those pops are lasting no time at all. Now, that can be a couple of days. It can be intraday. But that's what it's been doing. Here's today. You got the pop and bang, right back into the embedded reading. And momentum turned what? When it reopens, it's going to turn down. What's the trend? It's still up because you got the higher lows, higher highs, but you've hit the upper Bollinger Band and the 100-day average. In other words, it's already hit its objective. So we have a market that's trying to say something, isn't quite doing it. Two of the indices, one of them for certain, the Russell has weakened. The next one could be the NASDAQ, but it can also, you have to wait and see if you lose that momentum to the upside via the slow stochastic. We don't know. When I come to the TLT, the popular interest rate ETF, you can see how you're stuck here fighting day after day almost at this 100-day average of closes. You also have a market that is overbought, not trending. It has upside bias because it's over the 18-day average. It can lose that like this if the market gets under 124.28. Actually, if it did that, you'd have a pattern of lower highs, lower lows at that point under the 18-day average, and my guess is that red line would be pointing down. So we know the number that the bulls don't want to see. So they'll defend their position most likely against that, and I'd look for support potentially at the 18-day average 124.83. In the T-bond market, it's a very similar picture. You're overbought. You have a market that's got higher lows, higher highs. And now it's stalled 4 days in a row, 5 days in a row. At the 100-day average, falls to the 18 looking for support. What would turn the trend down? What would turn it down is taking out 152.25, since that would be under the 153 18-day average of closes. We had a high here of 154.5. Today's high was 154.2. So assuming you don't go up through that number, you could end up with lower highs, lower lows. So you start looking at your game plans. That's all I'm pointing out. Let's flip it around. What number don't the bulls want to see? They don't want to see 152.25 taken out. So you know the support zones. You know what could happen if they're taken out. Doesn't mean the market has to fall apart, but it gives you ideas, and that's what charts do. You're supposed to prep yourself for the what-ifs. In the 10-year notes, we have a market that's flat on momentum. It's got a pattern of a higher high. Then it comes down, and this low did take out this low. So you got no trend in the swing line. You don't have a pattern of an uptrend, higher lows, higher highs, or a downtrend, lower highs, lower lows. You do have downside bias since you're under the 18-day average, but I'm going to call momentum flat. I don't think there's anything there. Remember, Miss Yellen did meet with President Trump today, so the rumor mills, one way or the other, she's in, she's out, they'll be starting up shortly. When we go to the dollar index, it put itself into a short-term downtrend today. Lower highs, you've already had the lower low. We don't know where this low will end up. Market's under the 18-day average, and bias is, that's the bias, and momentum is still pointing down. If it wants to fall, potentially, maybe the lower Bollinger Band is support. Euro currency turned its trend up. Now you've got higher lows, higher highs. You can see momentum's pointing up. The bias is up. Unlike the dollar index, you're knocking on the door already of the upper Bollinger Band. You missed it by 10 points today, but that number's going to fall on the reopening the way the math is set up, and much move higher and you hit it right away. In the Aussie dollar, you're in an uptrend. You've got higher lows, you've had higher highs, we don't know where these highs are going to end up, and you're overbought already. What else? You're starting to narrow in the Bollinger Bands into a much narrower range, similar to what's going on in the yen. Can I show you something on the yen? Here's a market that's stuck for a few days at the 18-day average. Your momentum's up, your bias is up, and you had a pattern of higher lows, higher highs. If the market rallies, the upper Bollinger Band is one of the goals. Market goes to it. Neutral's the 18-day average. If it falls apart, the lower Bollinger Band might become support. Market stuck at the 18-day average, starts its way down, hits it today, and where does it rally back up to? The 18-day average of closes. So my point is, you're in this narrow band. Which way is it going to resolve itself? Because it will resolve itself as it winds itself up in there. The prelude to a trend is often sideways action. And from there, the market builds internally enough sideways action that the momentum, everybody's getting even, and all of a sudden it breaks out to the upside or downside. And the longer it goes sideways, I have found the bigger the move. In the crude oil, we're starting to back off a little bit, and you're going to see why. The Brent crude today, Brent, turned and lost its uptrend. You had, and that's why I left these arrows, higher lows. All of a sudden today you take out 57.18, hitting 57.02. You have a higher high and a lower low now. So I'll remove this one later, but I wanted you to see how that comes out. In essence, the market has stepped out of its uptrend. What else is clear on the chart? The sideways action of the Bollinger Bands in an overbought condition. Again, it's a market that seems to be spinning within those bands right now. In the WTI crude, you actually turned the swing line down. You now have lower highs, lower lows. The market managed to keep the upside bias by closing over 51.37 at the end of the day, the 18-day average. But when you reopen, if you open down, the momentum is going to turn on you there. So this could be where these markets back off a little bit. The warning sign is there. I wish I could tell you I know more than that. I don't. When I look at the December gasoline, you've been in an uptrend, higher lows, higher highs. You're overbought. You have not been able to extend the market high enough to get up to the Bollinger Band top, and you're having an outside day down. I would not be surprised if this scares the bulls in the market at this point. In the heating oil market, you know the number you made a run to. I mean, I'm laughing a little bit. You've got a higher high, you got a lower low. If you drop, the lower Bollinger Band should be the support. The bias is down, and momentum was pointing down as of last night. You drop down. 301.10's the Bollinger Band. 301.20, one tick away, was the low today, and you're getting a turn. Momentum is not turning up with this market at this point. It's flattened itself out right now. So, again, I think we have a market that's going to spin around in the Bollinger Bands a little bit as it looks for further direction. You know, and not only is it direction you look at, when a trend sets, how do you figure out where it might go? At the end of the day, I don't know any systems that can call what it'll do. I read a great article yesterday, I think it was in Reuters, where I'm going to be out of a job, and so are, right grammar, a lot of people on Wall Street and finance, because they're building artificial intelligence and robots to be able to do the thinking and give the better probabilities. It may happen. I don't think it's there today. I think that it's there for in and out trading like this when they're trading so many contracts within 30 seconds that it would make your mind blow. But you have to have that kind of capital to do it. As for projecting what the overall trends are going to do, I don't know. I don't know that they're there. It's sort of like walking on water, if you ask me. It's one thing to be using all this information for very fast, high-frequency trading. I don't know about trend trading yet. But when you get a trend after the fact, after the fact. And that's what price counts are about. Where might it go if it stays in place? And yes, we have the ways to predict, is it being broken? We show it to you in our we have two PDFs that teach you how to do all this. Our charting software shows it. And we send out in our charting software a chart of the day every day, so you're able to keep up and learn. As we're showing you what's going on, why we're doing it, then you can take the charting software, do it yourself, and you go, oh, wow, I do see that. That could be where this market goes. I understand the different possible projections to a downside or an upside. And you get them both ways. When you set up price counts activated, where might the market go? On a monthly chart, which I don't put a lot of faith in, you hit the third price counts today to the upside in the stock indices. So let's talk about this. How do you get it? And it's free. Give us a call. Go to our website. You'll see price counts. Sign up for it. Click up here if you're watching me on YouTube, or underneath us at any point you can say click here. Please send the free information. That's on a bunch of websites. I'm Ira Epstein. You have a good day.